Good morning, folks. It's Jason Madani here, and I want to introduce you to Jim Black. And a lot of you folks already know him. He's an awesome lender, and I've got some serious questions for him about what's happening today in the market and how things are working. And I think he's got some questions for me.
Awesome. Thanks for having me on today, Jason. Appreciate it. And again, it's exciting to see you face to face. I wish I could be there in the same room as you, but obviously we have to keep our distance right now, but there's still opportunity, as we know.
Absolutely. Absolutely. So I guess the big question today, Jim, is how are loans going and what are people doing? I mean, how do we get appraisals done? How are the interest rates looking? But I'll start shooting them out. Those are my first two questions for you.
Sure. So what's important to understand is that the world has changed in the last 3 weeks, not only for our more important concerns, health concerns, but also just in the fact that the financial markets have taken the biggest drastic change and shift that we've ever seen, probably back to the Great Depression. Not to scare anybody, what that means is we have to all adapt and adjust. And you've seen lenders do that. You've seen big banks do that. You've seen small banks do that. And what's going to happen right now is rates are very sensitive to these swings that are happening on a real-time basis. Some days we're seeing swings be as much as 0.75% in rate.
Wow.
Can you imagine one day thinking your payment is this, and the next day it's several $100s higher? So the uncertainty, the unknown makes it be a big challenge right now. We're also seeing some consolidation of certain types of loans. Think of what we do for a living as a bell curve, right? The ones on the outside, the external ones, or the smaller ones that are not in the normal bucket, are the ones that are getting compressed right now. Those would be bank statement loans. Those would be super jumbo loans. Those would be lower credit scores. Anything you can think of that's in a riskier bucket than someone who is maybe at a 50% loan to their current value, or their ratios of income are only 20% of their payment versus being 40%. The bucket of credit is tightening. It doesn't mean you can't get a loan. It just needs to make sure that we're preparing clients better up front and making sure they really qualify.
So pretty much the non-QM market is pretty much eliminated right now.
Yep. And non-QM, just to let you know what that means, is that's what we call non-qualified mortgages. Mm-hmm. Those are loans that the government will not service. That's all that really states, basically. They don't have conventional or standard guidelines that the government has issued through Fannie and Freddie Mac. Mm-hmm. So a lot of portfolio loans are non-QM loans.
Mm-hmm. Got it.
Yeah, anything from like a lot loan to a construction loan to a renovation loan, even other loans that are jumbo, anything over about $1 million, in my opinion, is non-QM.
So let's just say, is FHA 203K, are those loans still lending? And that's kind of a rehab loan we did a lot of back in the day when we had the financial crisis last time. A lot of people were doing FHA 203K. Is that still a program buyers can inquire about?
So great question. So this kind of segments into another aspect of what's happening here. There are 3 buckets that the government helps consumers buy homes with: Fannie Mae, Freddie Mac, and Ginnie Mae. Mm-hmm. We've heard a lot about Fannie and Freddie Mac. Those are 2 independently owned private companies, or I should say publicly traded companies, that got put under conservatorship in 2008. What that means is they could not sustain their balance sheets and they needed the government to bail them out. Those 2 elements are 100% backed by the government. The Ginnie Mae bucket is FHA, VA, and reverse mortgages. Mm-hmm. All of those products that fall under those guidelines. Those are guaranteed by the government, but they aren't backed by the government. Mm-hmm. So what happens in that bucket, if I'm a company and I have the servicing, or I've done a loan for an FHA loan or a VA loan or a 203K loan or a reverse mortgage loan, I'm servicing that loan and I have to guarantee the payment to the bondholders to make sure that they get their money, even if I don't get the payment from the borrower. And that's where we're seeing the big credit squeeze right now. So banks and lenders and servicers have turned off some of the exotic out of the bell curve products that are not vital to our industry right now.
Right.
So, for example, 3 weeks ago, you could get an FHA loan with a 580 credit score. Today, that score is 680. Used to get a FHA loan with no reserves. Today, it's 4 months reserves. They're all make sense moves in this market to make sure we protect the consumer. But unfortunately, VA is also affected by this, which I don't like, because we should help veterans. We should help people that have protected our country and our freedom. And unfortunately, they're in the same bucket with Ginnie Mae. So we are seeing a lot of volatility in the first-time home buyer markets. So just make sure, if you are a buyer, please go back to your favorite lender and make sure that you're still qualified, because the guidelines have changed. They are fluidly changing pretty much day to day. So make sure that you're qualified still, and that you're qualified under the rate and payment you're expecting.
Right.
We always try to qualify people about 2% over whatever current rates are, to make sure that they're comfortable with their long-term plan. That's really important to us as lenders, to make sure we do good loans and take care of people.
That sounds really safe. It sounds like you have to do a lot of research every day, Jim. Sounds like you're checking on.
A little bit, yeah. A little bit of research, a lot of coffee, and yeah, it's But you know what? In this time, just like you're doing right now, this is a time when people lead, right? Leaders lead. People that are passionate about this, that have opinions, they have done their homework, they've had the experience like you and I've had since 2001 or 2002 in financial markets. This is, I think, when our experience and expertise can shine. So I appreciate how you guys are leading the charge in the marketplace and making sure that people have the facts and people know what their options are. I'd love to ask you a couple questions, Jason, too, if you don't mind.
No problem. Just dated both of us, Jim, by the way, too.
Well, I have less hair than you, so I think I got you. I got some grays.
I'm not going to be in America for a while because of what's happening, you know.
By the way, I'm going to buy every Flowbee that's out there in the marketplace, because the Flowbees, those vacuum haircut things, are going to be a hot product in about 3 weeks.
I'll make sure I'm sending the link to where to get one.
We'll get an all-Cal gift package for our clients that we close.
Right.
So back to my question to you, Jason. I would love to get some more insight as a lender.
Yeah.
You're on the front lines of hearing all the stories. You're hearing everyone's goals with financing, with real estate. That's the biggest asset they have normally, is their home. So tell me what you're seeing with activity around, last few weeks, and some of the feedback you can give.
Yeah, there was a lot of question to whether we could even show homes, because federally, last week they were allowing, they said real estate is an essential business, but locally there was no determination on it. So a lot of the major companies weren't doing any showings. So we have had a high volume. We've seen our Facebook activity up 400%.
Wow.
And thank you, MJ, for giving me those statistics on what's happening out there. But we've seen a lot of people checking out our 3D tours. Luckily, we have video 3D tours, even floor plans. And for one of our listings, we actually have an exterior 3D tour. We actually had done that not because of what's happening with the coronavirus, but we were just trying out new technology. And that's why we have it we have about 15 vacant listings right now. And luckily, we have that technology so consumers can check out our listings. So we've seen a lot of calls coming in with questions. And as of yesterday, because I think it was the day before yesterday, on I think it was Tuesday, the County of Santa Cruz said that real estate is an essential business and that we can show vacant homes, not occupied homes. So yesterday I had about 6 requests for showings on our vacant listings. We are doing a lot of, I don't know if this is going to work on the camera, but we have, at all of our listings, we have Lysol, we have wipes, we have hand sanitizer. We've stocked up on this to make sure that when people are looking at homes, we can, we're going to turn on all the lights for the consumer. We're going to open the door. We're going to open the windows. We're going to leave some of the cabinets open because we don't want people touching the doorknobs. Or touching lights. We want everybody to just kind of visually inspect the house. We're actually standing outside to, keep some distance from folks so that it's nice and safe. It's much safer than, I'm not a health expert, but I feel it's a lot cleaner and safer than going into the grocery store. Especially on these rural properties, most of our listings have at least a quarter acre, if not 30 or more acres. So there's a lot of space, a lot of fresh air. it's a good way to get out and check out these homes. So we're lucky to have a lot of vacant listings right now. We also have instructions on all of our. I'm gonna maybe send a different kind of link, but we have instructions on how to show the listings and what to do and not to touch things. That I might send a revised. We're working on getting the grammar corrected here to make sure everything is punctuated and written correctly. But we have some instructions here for how to make sure to leave our listings and make it safe for everybody. It also shows making sure you keep distance, not more than 2 people in at the same time, and they're supposed to be from the same family. So just a lot of instructions to make sure things are safe.
And it's great, and safe is the number one thing, right? Safety and health is by far the number one thing we're all concerned about.
Absolutely.
Even with clients wanting to work with us, we're keeping our distance. We're having them email us documents, scan us documents, take photos of documents, anything that's not essential to work, to interacting face to face. We're trying to find ways to do that.
Yeah.
Which brings up a good point about appraisals. So appraisals right now, they are going on, they are happening. Depending on the type of loan that you have, will determine what type of appraisal is required.
Right.
Again, that Fannie and Freddie Mac bucket, the one that's within the bell curve, those loans are starting to get relief from the national lenders regarding drive-by appraisals versus exterior appraisals.
That's so smart.
That helps a little bit to relieve some of the pressure, but on some of the jumbo or portfolio loans that banks, credit unions, mortgage companies offer, they're still working out what that means. But either way, everyone's open for business. I've gotten, I think, 18 orders completed in the last 10 days, which is fantastic. So everything from refinances to purchases. So the business is happening. And one thing that I think people need to understand, last time the recession hit, the industries that led people out of the recession were housing. It was housing. That was the number one thing. Granted, a lot of people got affected negatively in 2007, 8, 9, but it also created a lot of wealth for families that made good decisions that were long-term, that they were going to stay in the property and they didn't care if the value went up or down 10 or 15% because they were buying a home because they wanted a place to live. They wanted a place to have their families be. They enjoyed where they were. That's, to me, the definition of home ownership, is making sure that you're thinking long-term about whatever decision you're making. Because if you are, some of these little nuances or short-term distractions aren't going to be as heavily felt or stressed about. Right. Again, we want this to be a great experience for anyone buying a house.
So what happened in 2001, Jim? Just going back, I mean, we all remember the 2008, what happened there, and it was real estate related. But in 2001, you and I were both, you were working at a stock brokerage. I was an intern at Solomon Smith Barney working there. And what did you see? What's the difference between what's happening today and what happened in 2008 and what happened in 2001? Let's go back where you dated.
Okay. All right. So I was 6 years old then. 2000 and 2001, I was fortunate to be a Wall Street market maker trader. So I was a NASDAQ trader. That was all the .com startup companies. I was one of those guys you see on the phones yelling, screaming, two flat screens, which were brand new. In any given day, I could make or lose $5 million for the large company I worked for. And I was like 22 years old, right? So I'm pushing buttons with my finger, making people billionaires or making them bankrupt. And it was really a strange feeling to have by just pushing a button with your finger. And what happened there, in my opinion, is what started to happen, that was a financial crisis only around what I would call overvaluation of what value a company should be given. Back then, companies were evaluated on how many clicks they had on their website or how many views. Like, how do you create revenue from someone viewing your stuff? You can't. But companies, their valuations were based off of these non-financial variables, and that all came to a crashing halt, as we know, along with September 11th happening. Those factors really depressed the market during that time frame, and that's when we saw rates really drop and help homeowners. We saw rates go lower. We saw loan amount limits go higher in California. All of those things allowed there to be more of flexibility and volume in the mortgage business. So that's what I saw in 2001. We saw a good recovery till about late 2006, when everyone could get a loan. If you've seen the movie The Big Short, or a couple other movies like that, when you hear people that are, working at coffee shops that they own 3 or 4 houses, and you're wondering, okay, great, I understand having one, but how did you qualify for 3 or 4 more? You understood that there was a major credit lax, or a too many exotic products, too many different ways of pulling and packaging garbage together and selling it off. And that's what we call the mortgage-backed securities meltdown. So what happened then in 2006 through 8 were people didn't qualify for loans that were given loans. And that was very clear. And that's why we saw this domino effect that affected everybody. If you lived in a neighborhood like a subdivision, or you lived in a condo or a townhouse, if your neighbor lost their job and had to do a short sale, it affected your value directly, because you probably had a similar type of home, right? Condos, townhomes, anything that has conformity is always going to be hit harder when the market goes down. It'll also bounce back quicker, because if things start moving in a positive direction, you're gaining equity by a lot more transactions. So that really caused some issues in 2007, 8, and 9. I know you were heavily involved with helping people with short sales and the foreclosure market and finding ways to make it work. And you got a lot of your experience and your great reputation in those times, right? Tell me more about how you got through that, if you don't mind.
Yeah, so I started in real estate in 2003 as a new agent, as an intern at Coldwell Banker, and then ended up working at the office that we own now across the street from the high school in Felton, and we have the second one in Capitola. But in the midst of it, we went from this really hot market where people could buy houses pretty easily with stated income, and most of our clients had 20% down buyer-wise, and we didn't have a lot of our sellers go into foreclosure or have to short sale. But during that time, we had a lot of people reach out to us that just needed to get out, and we helped them do short sales, and we helped them later on be able to buy homes again. Well, the nice thing with doing a short sale is we were able to buy back in 3 years instead of waiting 7, and they were able to relieve and stay in the home for a little longer, save up money to rent a home. And then for buyers, we had a lot of buyers take advantage of my secret weapon was the USDA product. So it was a no money down program, but for not stated, you had to have really good tax returns, and it was you'd know more about it, Jim, but it had really conservative ratios. So what happened back then is buyers, with their income to debt ratios, that was very conservative. So it was a safe loan for folks to get into. And selling a lot of homes in the rural areas, these purchases were $150,000, $200,000, $300,000, and those homes ended up doubling in value, and people upgraded it and have a lot of equity today because they were able to take advantage of USDA and VA and FHA and 5% down, 20% down, and have really low interest. So they're right now their payments are really low. So it's been great to survive that time for the opportunities we helped our clients get into back then. So that was really neat. So yeah, making it through that was, I remember back then just, sitting in this office and working from, I didn't have kids back then, which was great. So I was pretty much here at 6 in the morning, 7 in the morning, and sometimes working till 8 o'clock at night, trying to just help people get into homes. And that was, one thing I think, this is going a little bit off topic, but in the financial industry, when I was working there and trying to help the folks I was working for speak to people about diversifying their portfolio and reaching out to one of the advisors, it was kind of scary when you watch their accounts go down. The nice thing about homes is they're so tangible. You can live in them, you can rent them, you can actually touch it and say, this is my house. Here's some wood. Yeah. Here's some, here's a deck. Here's a nice view. With stock, it was always, hey, it's just it comes in an envelope and that's about it. So, and you open it and you look at it and that, but having something tangible has been really, really great to sell and really great to help people. That's my real passion with this and today. I mean, just being innovative and making sure that we're on the ball. I mean, one of our offers that we received Actually put it in escrow yesterday. This is an off-market listing that we have 3D tour, and we actually have about 15 more listings that are done. We can't stage them today, but we're going to be virtually staging them, which is pretty cool.
It's really cool. Yeah. I'd like to virtually stage my house if I could do that.
My man cave. Your man cave? Oh, perfect. Well,
we're going to talk about now because my daughter's good.
We could switch it every day and move furniture around. Your daughter's like, what is that? What happened?
I love that.
But this is an offer. I don't know if we can show it, but the right here, the offer is subject to inspection. So that's pretty neat. We're waiting. It's an occupied home by renters. We're waiting for the shelter in place to be lifted to be able to show it, because the occupants we want to make sure everybody's safe. But it's kind of a neat thing. We want to make sure we can actually, we're putting deals in escrow. We're being creative but safe at the same time, and using technology to make this possible. We actually had the renter, the occupant of the home, use his phone to do a live Zoom call with the buyers and the buyer's agent yesterday. So
that's cool.
Just working around working around the issues. We want to still work and get things done. I'm actually hopping in the office now early, since I'm not dropping my kids off at school, and coming home a little early so I can help my wife with my partner at home, help with getting some energy, going on little bike rides and playing in the backyard. So it's a little changes here and there with our schedules and our daily lives, but we're making things happen.
Cool. Awesome. Awesome.
What are you seeing on qualifying ratios, Jim? Has that changed much with people? If they we talked about it a little earlier about people that check with their lenders about qualifying. Have the banks lowered qualifying ratios? And what is the jumbo limit right now? What's that? And how can we explain that to the consumer out there?
So I just see right now that we're trying to educate people to make sure that they know that making long-term decisions is really the important thing. So making sure that they look at, like I said earlier, their long-term time horizons to make sure that they're making good decisions. We also want to make sure that they have a job, or that they feel comfortable and confident that they're going to be okay with the decisions they make today. So those are actually more important than even talking about rates initially. So it's just, hey, is this something that you're looking to do for the long run? We're also hearing stories about, hey, this property I thought never would come up on the market is now available. It's my dream home. I want this house for the long run. So people that look optimistically at the future are going to make good decisions for themselves for the long run. If someone's trying to do a quick fix and flip or some type of aggressive short-term time frame thing, I don't think that's a smart idea, because the loans aren't available for those. So right. I'm going where the loans are going, right? I'm trying to educate my clients and real estate partners and sellers around stay where the loans are going to be available in that price range and that activity, because that has the most likely opportunity and chance to get it done. So that's what we look at.
Great stuff. I feel like we're in the right position here too in the San Lorenzo Valley. We're close to Silicon Valley, and our price points are affordable still. So folks that want a little more separation of space, if you're renting a condo in San Jose and you want to not worry about touching elevator buttons and have a little sunshine and a little space and have a good price point. A lot of these homes with these low interest rates, you could probably buy a home today virtually or come out to the mountains and get some fresh air and keep some separation of space and get a good interest rate and a good property and have, it sounds like, a good mortgage option and something safe.
Absolutely.
I think that's going to be a new thing. I think we're going to see people wanting to get out of the big cities and have a little more separation, and maybe have your own garage to pull into instead of a big parking lot full of cars and people. So
I agree. And I'd love to share a story about my own experience in 2001 that I use a lot.
Yeah.
So in 2001, obviously I was 6 years old. And I bought my first house, in 2001. I think I was 22 years old. I had no idea or no concern about the things that were going on in the housing market. I wanted a place to live. I wanted a nice place to live, had a backyard. I was in San Francisco. I wanted more space. So I bought a house in Walnut Creek. I had no idea that the market had dropped. My house I bought in November of 2001. Okay. House I paid, I bought it for I think it was 424, 500 for a 4-bedroom, 2.5 bath house in Walnut Creek. I had no idea what that meant at that time frame, but I knew I wanted to buy it. Well, less than 2.5 years later, I was able to refinance at a value of $675.
Wow.
So it really went up $201,000. $201? Yeah, $201,000 roughly, or $250,000. Sorry, $251 in about 2.5 years. And again, that wasn't my goal to make money quickly, but it was an awesome outcome for making a good long-term decision. And that helped me then buy another house. That helped me buy another house, and then it became, something where you can just keep using that as a good position to help yourself financially. Just like the stock market, for the long run, it should be just fine. We're going to go through some short-term turbulence, but again, if you're looking long-term and holding on to something long-term, kind of like how Berkshire Hathaway or Warren Buffett invests, you're really going to be okay because you're enjoying what you have. Like you mentioned earlier, it's not a piece of paper that says you have this much ownership in a company. It's something you can use. You can go outside and barbecue. Right now, you can have more space for this quarantine for however long it lasts. I'm so thankful I don't live in a big city because of those reasons. Because I have a backyard, I have a room, I can, feel like I can live and not be pent up in some rental somewhere. So I just look at that as a way. I use that example all the time. Even if values go down a little bit, rates.
Yeah, that's a really good example. I like that.
Yeah, it's the truth. And rates even may be higher in a year or two. So even if values go down a little bit, if rates were to go higher, if inflation kicks in, then you're going to be paying more anyways. So this is a fantastic time to buy if you're thinking long term, and if you really look at the investment you're making in you and your family and what's important. So.
Yeah, I remember I actually bought my first house in 2001. One thing I remember is my 7.1% interest rate back then. I had a house, 1 bedroom, 1 bath with a huge deck on the river in Ben Lomond on Woodland Drive. And I've sold it a few times since then, but I remember I sold it, I think in 2003 or 4, and we sold it for $475. But being, saving up my money and putting my first down payment, back then I was working in the stock industry and working for my dad, and I think I had 3 or 4 jobs just trying to get it and save. So I think it's a good time to encourage young people. If you have money saved up, if you don't save it, if you have it saved up, maybe it's a good time to get into a mortgage and not have a 7.1% interest rate. I'm not sure how yours was, Jim, but it was pretty expensive back then. So I think it's good to have some space, have a good mortgage, have a tax write-off, and take advantage.
Yeah, just enjoy living and just enjoy things. And again, job losses are probably going to go higher, but a lot of the economists that I talk to, I studied economics in undergrad, and from my master's, I studied economics and financial markets. A lot of people are saying this is what's called a V-shaped curve, okay? It's not what's known as a W, where you're going to see the V aspect. So you're going to see a major sharp decline, and then probably a pretty good increase, very short term. That's going to be what's called the V curve. And that's, as of today, who knows what's going to happen tomorrow, but that's what a lot of smart economists are thinking. A lot of people that are buying homes right now understand that philosophy. And again, this is a great time to talk to a loan officer, talk to your realtor, talk to your financial planner, just to make sure that your goals are still in line with where we are today. Again, if you have a long-term horizon, it's fine. It's when you have maybe a short-term need, or maybe you have a life event coming up or happening now, that's when we really got to hunker down and make sure that we're giving people proper expectations. I had one last night at 5:00. A seller in San Francisco. Jim, should we wait and rent out our property to a corporate relocation company, or should we sell? And I said, I'm just going to give you my experience. They had hired a real estate attorney to do their transaction. Sorry, it's not Room Real Estate and Madani team. But they hired an attorney to do their transaction. And the attorney's like, hey, you should take this rental offer. And I said to them, well, while that's nice, what happens if someone else in your condo building sells at a discount before you do? What happens if the corporate client doesn't make the payment or uses this deferment, or the government comes out with some new law that we're not aware of? those are all reasons to probably bite the bullet and sell now and get ahead of any maybe downward pressure we're going to see. So they appreciated the call. Their price point was a couple $1,000,000, so it wasn't like it was 500,000, but they're going to get ahead of it. They know that they may take a little bit less upfront, but the peace of mind is more important for them, for their life events and their life goals. They've already moved on to a better house. And those are some of the things that we're going to have to educate people on. Is it's going to be relative. If you buy it cheap, price point, most likely you're going to be selling at a little bit of a discount. There's a trade-off there, and those trade-offs need to be evaluated.
It's really good to give people really good advice right now and send them to the right professionals and make sure that they're safe, and not only health-wise but financial-wise in this time. What are you seeing? I'm getting a lot of calls with questions about forbearance and what should people do, and I'm referring them to to you and other lenders that they've worked with in the past, and just trying to get people the right answers. What are you? Is this for everybody, Jim, or what are you seeing right now?
I'm going to share a screen with you if I can pull it up real quick here. I'm going to share a really cool. It's going to be a really easy way to understand what we're going through, because right now there's not a lot of good information out there about this. So give me one moment here, and I'll just pull it up. But forbearance, there are three definitions that are very important to understand. Okay, number one is forbearance. Number two is interest deferment, and the third thing to be aware of is what we call a modification. Okay, you probably remember a lot of modifications that were done, Jason, back in 08, 09, 2010. A modification means that they can take the current loan and current balance, modify that note and loan program without having to requalify the borrower to allow them to have a lower payment now. So what big banks did in 07, 08, 09 is they did a program where they allowed people to not make their payments or make less of a payment or lower the interest rate, where they would extend the life of the loan. So they would go from maybe a 30-year term to a 40-year term. Well, that was a good way of working for the bank, because banks would still make money over the life of the loan, right? So that was a good process for them to do. And that gave borrowers the commitment to really step up and follow through on their commitment to have the loan outstanding. Another solution that happened was payment or interest deferment. Interest deferment means you aren't making the minimum payment. That is very bad for credit. If you can't make a minimum payment, then what ends up happening is you're not able to, help your credit score at all. It's actually going to be affected negatively, because you would not have had made the minimum payment owed on that loan. And so that's a big one that affects credit. So again, a modification is a long-term change to your loan. A interest deferment means you're not making the minimum payment on your loan. The last bucket has to do with the actual deferment, or I should say forbearance of a payment. What that means specifically is, on a forbearance, you have a situation where people may or may not be able to make the payment today. Maybe they lose their job. Maybe they have another life event happen. But I think it's important to understand that that forbearance is only for the short run. Banks have only signed up right now throughout the country, unless it's on a case-by-case decision, for the ability to have 3 months deferred, and at month number 4, you owe all 4 payments.
Wow.
So that's pretty crazy, right? So I'm going to send you guys a little screenshot here that we can share with our viewers. Sorry, I'm doing this kind of real time, but we'll get it here. On forbearance, again, if I sign up for forbearance, I am in a situation where I owe money that I am going to kick down the lane a little bit to a later date. Okay, so here's exactly what that means. Excellent. Perfect. Okay, can you guys see this? Does this come up okay?
Yes.
Yeah.
Okay, so here is the forbearance process. Okay, Susie, homeowner, has $1,000 a month mortgage payment. I would love to be her, but unfortunately that's not probably most people in California.
No.
Her payment was due yesterday. She applied with her mortgage forbearance servicer, which you find out who that is by the bank that you have your statement through, to determine if you can get a forbearance. If the forbearance is granted, that's a 3-month grant in this example. No payment is due for April, May, or June until July 1st. July 1st rolls around, and guess what? $4,000 is due. So I don't foresee this being a really good situation for anyone right now.
Especially in California, the bigger mortgages, so the numbers go up quite a bit.
That, and also if you lose your job and you're living paycheck to paycheck to begin with, do you think you're going to pay back 4 payments when you don't have a job, when you're furloughed, when you're collecting unemployment at a fraction of what you make probably? Or if you're counting on stock options or bonuses or overtime or commissions? This to me is an important thing to understand, that forbearance, I do not believe, is effective where we live in Northern California, purely because the way it's set up in this regard, it doesn't help anyone. It makes you more stressed out, in my opinion. Right? If you don't have a job and you feel like the bills are adding up, it's going to create more stress, in my opinion. So
if your mortgage payment, if you can make it at the time, so you don't
or get a modification, request a modification. Right? A modification is a permanent thing. And that's what I think we're going to see next, is the modifications happen. So Wells Fargo, Bank of America, Chase, Citibank, Union Bank, US Bank, all these large providers of loans are going to be doing a lot of modifications because it doesn't take a whole lot of effort to do them, and it's built into the note. So the note actually allows them to modify the loan for a better situation, as long as the borrower hasn't committed fraud. So that's what you're going to start seeing. So again, forbearance is very important to understand. I hope this makes it clear. I'm a proud partner of AIM, what you see on this email below, the Association of Independent Mortgage Experts. We're a national organization that has over 40,000 members. So this is something that's, a very big thing to be aware of. We're fighting right now with lobbyists. We're fighting through lobbyists to get to the government to help them realize that this is not a solution that we should be promoting, especially with all the politics involved, right? I love Gavin Newsom, but when he comes out and says, hey, it's 2 clicks to get your forbearance done with Bank of America, he didn't, I don't think, thought through this. If someone doesn't get their job back or has healthcare issues or has childcare issues, these are all things to be aware of. So I just want to make sure you guys are aware of the facts around the forbearance. And again, each lender is treating this differently. You're going to have a better outcome if your loan is a portfolio loan on someone's balance sheet. Remember that, Jason, from 2008 and 9 when WAMU or other big Wachovia or World Savings had the loan? You got more flexible solutions because banks, if it's on their balance sheet, they're losing dollar for dollar of net worth. So they're going to try everything possible to help avoid those dollar for dollar losses, because that affects their valuation, that affects their credit, that affects their stock prices, that affects their ability to lend. So this is why I think you're going to see this be a big topic.
That was really important to know who's your servicer and what you can do. I remember back in the last recession where we had a lot of clients come to us that needed the short sale, and we were trying to make sure that they had the opportunity to do a loan modification before we did the short sale, or we worked on both simultaneously. We put it on the market and we had them working with somebody to help them get their loan modification done, and we gave them an exit clause to exit the contract if they could keep their home, to protect the consumer. We didn't make any money off the loan mods, but we were happy to create stability and keep people in their homes if that was the best option, if they qualified to kind of have both options. So that was really great. It sent a lot of people to us to kind of evaluate each situation differently. So that was one thing that kind of brought me back to what happened back then. But I don't think we're going to have quite that situation like we had last time. I agree with you right now. I think that the interest rates are low and there's still a good demand. I was looking at my phone and I'm getting showing requests for our vacant homes. And I think if people were looking to put their homes on the market and they're vacant, or they have a second home they're going to be living in, with the current laws today, we're allowed to sell homes and show homes that people are not residing in. That was one of the definitions for Santa Cruz County. So every county is different. If folks are out there and they're trying to figure out what's happening in San Francisco County or LA County. There's two different things happening in both of those counties, actually. So feel free to give me a call. I have really good references and resources to people that work in all the counties in California and outside of California as well. A lot of agents and a lot of the networks that I'm involved in have top producing realtors that care about the consumer and will help guide folks in all over the country. So if you need help or somebody's watching this video today, feel free to give me a call on my cell phone number. We'll have that at the end of the slide today, just so people can ask questions about pretty much anything, and I'll help direct you to the right tax people, the right lender. Jim's available as well. So if you have questions in this time, we're here to answer them and help you guys make the right decisions. For everybody's needs are different.
Thanks for inviting me, Jason. And again, this is the time when leaders lead. Again, like I said earlier, and this is the time when you can be a hero or a zero from a professional service perspective. And I know you're going to be a hero, and I'm trying to be there with you as a hero. So thank you again for your time. MJ, thanks for being the host here. And yeah, we're excited. We're excited. We're here to help. We got some challenges ahead, but let's get through it together.
And feel free to check out the website for all of our virtual tours on all of our homes. Every one of them has a virtual tour, a 3D tour, a video. MJ is going to send all the links for folks so they can check everything out. Thank you very much. Thanks for joining us, Jim. Thank you, MJ, for hosting it.
Have a good day.
Take care.
Bye.